Yeah, the IRS has 3 years to assess you, which means that the taxes that you filed 3 years ago, if they don't assess those by next year and say, oh, you owe tax, you get off scot-free, which is pretty cool. But a lot of people think that the statute of limitations on the IRS from collecting from you is 10 years from that, but that's not how that works. They have 10 years from the date of assessment. That tax return that's 3 years old, if they do assess you on that this year, it's from now 10 years forward. It could be up to 13 years that they have to assess you and collect. So they assess you for 3 years ago's tax returns, and from that point now, 10 years forward, that's how long they have. So it's 13 years. If you've committed fraud, or they say you've committed fraud, it's up to 17 years, because now they have 7 years to assess you, and then 10 years on top of that. If you're in the state of California and they want to come assess you, that's a 20-year statute of limitations on top of the 3. There's no real tax strategy in saying, oh, I'm going to get away from the statute of limitations, because it's so many years. And they can still collect on the interest, and that's 6% per year, year on year. And that gets real expensive really fast. We want to handle our stuff with the IRS as quickly as possible so that we can move on with life, because there's no part of the IRS collection process that we want to withstand for very long, because life is just too short.
And I'm inviting you to my free live webinar on the secrets that the elite don't want you to know about how to save money on your taxes from your personal and business income. The link is in my bio and here in the description. I'm looking forward to seeing you there live.